everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Wednesday, May 22nd, 2013. Well, a change of trend today, and the candle we're analysing is the second last candle on the chart. That's the one that's completed trading for today. The following candle is still currently developing and is looking quite bearish at the moment, but let's analyse the candle that has finalised trading. And for the previous day's trading, we were looking for a potential change of trend. The market had rallied towards the 98.59 level of previous support and now resistance. And then today we were waiting for this sell-off, looking for a lower high and lower low, and that was confirmed in this market, with the market establishing that lower high and lower low on a very large black-bodied candle. The black body denotes the sellers gaining some solid downside momentum in this market in terms of net effect. So the sellers have made a significant amount of net bearish progress on the day between the open and the close, and for yesterday's trading, with that being a small black body at the end of this first time frame uptrend, it did suggest that there was good potential for that to happen. Now the market has found support at the 96.62 level, and there was some rejection from there. We can see the shadow on the bottom of the candle, so that is an important level for trading for tomorrow. And here we see the market at the moment. It is testing around that level and just poking through that 96.62 area with a fairly bearish candle at the moment. So if that market does continue trending down, we do have support at 95.81, then down to 95.36, and no support in this market until the market trades down to 93.86. So we are getting follow through, a bearish candle where the sellers have taken back control of this market, and we are seeing follow through at the moment. Now in terms of the Fibonacci extension, now we've established this first time frame downtrend, we're looking at the relationship of this downtrend to the previous time the market was trending down, and here today we saw the market close at the 23.6% level. We have been rejected from below there, a possibility of a change of trend, but as this market is developing, it doesn't seem likely. The sellers have closed with control for this market that's completed trading, and the suggestion is that we should be looking to the 38.2% at 96.07, or even down to the 50% level down at 95.35 for potential support. In terms of the Fibonacci retracement, we're examining the relationship of this new first time frame downtrend to the previous time the market was trending up, and here today we've seen the market take out the 100% in a bearish manner. Our next target is the 161.8% level at 96.29, and then below there the 261.8% at 94.98. Now in terms of Ichimoku, obviously a bearish market in all three timeframes. The market's trading down below the cloud. Here we had that bearish breakout, a sell signal with Ichimoku up around 102, 102.77, 103. Has been a great signal for this market, a great trade. And we saw the market trading down in the second time frame downtrend, finding resistance at the Tenkan-sen, and that's a classic way that very strong markets will behave. With the market trading down below the cloud, it's bearish in that long-term time frame. The market is bearish in the medium-term time frame by trading down below the Kijun-sen, and in the short-term time frame by trading below the Tenkan-sen, and the Chikou span is confirming the bearish activity that we're seeing in all three time frames. Looking at the Kijun-sen and the Tenkan-sen, they're pointing down very sharply, and that's reflecting the very solid downside momentum that we're seeing in this market. And here once again for today's trading, we've seen the market establish another lower trough, and here we have the series of lower peaks and lower troughs being established for that second time frame downtrend. So quite a bearish market. The sellers are really very strongly in control in every time frame, including the short-term dynamics on this current candle. 96.62 was a crucial level to this market, for this market to continue the downtrend, and at the moment we have breached that area. The next target here, based on support and resistance, is 95.81, and then that down to 95.36. If the market does find the strength to rally, then very strong resistance at around 98.59, and then at the Tenkan-sen around 98.31, just below there, and coinciding with the rejection from all of these candles. So very solid resistance overhead. Likely that we will see this market trading to lower levels, down to 95.81.